Welcome back. Now, at the half-year mark, Attaq has swung from a headline loss to headline earnings per share of nearly 54 cents. The Mall of Africa owner also boasts a 49.1% jump in distributable income per share, boosted by its move in becoming the sole owner of the shopping centre last year. The group has rewarded shareholders with a near 47% hike in the interim period, a hike in the interim dividend to 44 cents. Attaq CEO Jackie van Niekerk joins us with her assessment of the performance. Jackie, thanks so much for your time today. So, as mentioned, those numbers really looking good. The group described the performance as strong. As we get started, just take us through some of those factors that boosted the half-year performance.
Yeah, thank you so much. And the strong performance was really boosted by our landmark GPF transaction that we concluded October 23. So in our prior interim period, we only had 2 months of the GPF transaction impact versus a full 6 months of the of this interim results period. And what drove those factors of the GPF transaction, once again highlighting we've significantly reduced our debt. We also went on a debt reduction plan, not just reducing our debt, but also the cost of debt. That has significantly improved our earnings. We've also acquired Mall of Africa, the 20% coming through for the full 6 months. We've disposed of our shares in or our stakes in our rest of Africa investment in exchange for some Lango shares. So there's multiple factors that has started coming through the interim period that we did in the prior period.
All right, so let's talk about, the operational aspects. Then occupancy rates are quite strong at 91.9%. What kind of dynamics are playing out here? Where are we seeing the most retention rates? Where are we seeing more interest in your portfolio?
Yeah, so our portfolio has got exposure to all sectors. So starting with retail, with the highest occupancy, really strong numbers coming from retail trade, which always equates to high occupancy numbers. We also seen positive reversion in our retail shopping centers from a rental point of view. Logistics being a strong component of our portfolio as well, but more towards the latter part of this year, early part of this year, we've seen strong inquiries and also strong leasing activity that is starting to come through. And then wonder by wonder, our collaboration spaces, which is offices, which always people are working from home, but we definitely seen a swing back to the office. CEOs, MDs, people, companies worldwide are calling people back to the office, and that has directly impacted the leasing activity. A lot of corporates wanting space and some corporates wanting more space, driving our occupancy factors.
And then let's zoom in on your expense line. I know municipal costs usually amount for the chunk of those costs, particularly the rates and taxes. How has the group been able to, mitigate those risks? Because it also does filter through to tenants, of course.
Yeah. So we measure the effort ratio also of our clients, and we've put a lot of work in it, and we've spent a significant amount of time in how we measure utility. So we're digitalizing our entire business of putting digital meters, water and electricity meters in our business. We're managing it proactively, making sure that if there's a water leak, we need to know about it, significantly save those costs. And then a lot of discipline, containing costs, saying no to a lot of things, making sure that the R1 we spend is worth the R1 we spent. And I believe with a lot of discipline, and then digitalizing our meter and how we manage our utility, which is by far the largest component of our expenses on our income statement. We're starting to bear the fruit, containing the cost of our utilities.
And you talk about cost containment, right? And I know that the group has also made efforts with, cutting down its reliance on Eskom with some renewable energy projects, right? How's it been going with water? Because yes, we are solving the Eskom issue, but, we've been having that water shortage issues. Has there been some strategies in place to mitigate those risks? Because you did talk about, the digitization of your meters and how that has been working out for you. How has that also just filtered through in terms of water shortages and the strategies being implemented on that front?
Yeah, so it's quite a big strategy we've started implementing actually 2 to 3 years ago. Firstly, we looked at, water backup. We started with a 2-day water backup in the entire portfolio. Now we're progressing to a 5-day water backup where practically possible to ensure that when our tenants trade in our spaces, all of our spaces, that we can provide for prolonged water outages. Then second of all, we look at our buildings, and this is a project we're busy with now. So how do we reduce the consumption of water? The behavior is one component. You can have all the backup, but if you've got a building that is, inefficient. So we're now looking at the inefficiency of the building, reducing the backup water with the backup water, and then driving the efficiencies down. Then thirdly, we've got the digital water metering to monitor where is there leakages, where is the inefficiencies in our system. And collectively with those three elements, we combating the crisis, the national crisis that we have, and also providing our clients with the superior service of having resilience and water backup.
And before I let you go, Jackie, we are in a lower interest rate environment. And I know these rate cuts do take about 12 to 18 months to actually filter through into the economy. But is there anything significant you've noticed since, we've started seeing these rate cuts come through from about September?
Yeah, so we definitely see a significant component in Ellipse, the residential sales. We've had tremendous sales over the last 6 months. We was hoping for sharper rate cuts sooner. That hasn't transpired as we're in a global, uncertainty at this stage. But we've definitely seen it transpire in residential sales, and we also see it in the spend in our retail market, where we see shoppers spending. We've had a tremendous Black Friday. We've had a really good January trade. We're seeing February trade being very well. So definitely there's more money in our consumers' pocket, and we see the residential sales picking up in sales.
Jackie, thanks so much for your time and your insights. We will catch up with you again in the next 6 months. That was Attacq CEO Jackie van Niekerk.